Hello, welcome to the weekly technical analysis review for Monday, September 16th. I'm Rafi Barajan at XM.com. And for this week, we're going to be looking at WTI Oil Futures, Euro Pound, and the Kiwi Dollar pairs. So let's begin first with WTI Oil Futures. We can see that we had that sharp spike upwards earlier in the day. Prices hit the 123.6% Fibonacci extension of the down leg from 60.98 to 50.51. So that comes at 63.45. Looking at the momentum indicators, they suggest there's still plenty of positive momentum even though prices have drifted lower intraday. RSI is sharply pointing upwards. The MACD has turned positive. So if we were to see further gains in the coming days, the next target on the upside is likely to be first the 138.2% Fibonacci extension at 65, and then above that we've got the 161.8% Fibonacci at 67.45. So if prices were to successfully overcome the 2019 high of 66.57 from back in April, that would help turn the medium-term picture back to a bullish one. At the moment, though, it's still pretty much close to a neutral outlook in the medium term. So at the moment, we've got support coming from the 78.6% Fibonacci at 58.74. If that level is breached, prices could drift towards the 57 level, the 61.8% Fibonacci, also near the 100-day moving average. Below that, we've got more moving averages. The 50 and 200-day moving averages are around the 56 level. Slightly below, we've got the 50% Fibonacci at 55.74. So if prices are unable to hold above the 50% Fibonacci, that would risk turning the focus back to the downside, and price could drift towards the 53 level, the 23.6% Fibonacci. Let's now turn to the Euro-Pound pair. It's looking rather bearish. At the moment, the RSI has flatlined just above the 30 level. The MACD is looking incredibly bearish as well. Prices have stabilized, though, just above the 200-day moving average, around 0.8865. So if we were to see further losses and 200-day moving average is breached, prices could then head towards the 0.88 handle, which is just below the 61.8% Fibonacci retracement of the upleg from 0.8490 to 0.9324. Below that, we've got the 78.6% Fibonacci at 0.8668. However, if prices were to bounce off the 200-day moving average and turn higher, we're likely to see resistance initially at the 0.89 level. That's the 50% Fibonacci. Above that, we've got another important potential barrier. That's the 38.2% Fibonacci at 0.90. And then comes the 50-day moving average at 0.9060. But prices would need to go as far as the 23.6% Fibonacci at 0.9127 in order to help shift the current neutral medium-term picture to a more bullish one and increase the chances of Euro-Pound resuming its uptrend. We had that peak at a 10-year high of 0.9324 earlier in the summer. And our final pair for today is the Kiwi dollar. Looking at the momentum indicators, they're all pointing downwards. So we've got a very strong bearish bias in the short term. Prices are just above holding above that descending trend line at the moment, near the 138.2% Fibonacci extension of the up leg from 0.6487 to 0.6789. That's also, we also have the 20-day moving average in that region as well. So if that support area fails to hold, prices could drift back towards the 0.63 handle at the 161.8% Fibonacci extension, and that's also near the 4-year low of 0.6268 we had earlier in September as well. And then below that, prices could head as far as the 200% extension at 0.6184, and that would also signal a resumption of the long-term downtrend. But if prices are able to rebound off that descending trend line and able to overcome resistance at 0.6445, we can see prices fail to break that barrier over the past week or so. So if they do manage to do that, if you do get an upside reversal, that would help strengthen the upside momentum, and then prices could aim for the 50-day moving average around the 0.65 level. However, we would really need to see further gains, at least towards the 0.66 handle, which is the 61.8% Fibonacci extension, in order to give us a more convincing signal of a shift to a more bullish outlook in the medium term, though at the moment it's looking very bearish still. That's it from me. Thank you much for watching and have a great day.